morning, all. As continuation of all our video series, this time around we are introducing a new subject altogether when it comes to investing, which is called P2P investing. This time around, uh, the particular presentation is co-hosted with Amit More. He's the founder and CEO of Finzi. I'd just like to give a small introduction about Finzi. Finzi being started in 2017, and it's been headed by Amit More. Hi, Amit. So,
Hi.
Amit being one amongst the experienced persons in the industry who has around 20 years plus in financial and banking industry experience. He's heading the Finzi group. Welcome, Amit. Uh, just wanted to say it's a very good journey for you. I think from 2000, I think you had a struggles, but I think you have been doing good when it comes to your company's growth as such.
Thank you so much. Thank you so much, Uday, for hosting us, and it's glad to be on your video channel.
Yeah, thank you very much. So I just wanted to know on our investors and clients' behalf, I just wanted to know how does Finzi work and who are the regulators behind, so just a regulatory brief if you can give.
Yeah. So Finzi is a P2P lending company. It stands for peer-to-peer lending company. It's a fairly kind of a dated product. It started way back in 2005 in UK, but India, it had started in 2012-13, and then in 2017, Reserve Bank of India came up with a regulation. So I'll talk about the regulations a little later. Let me first talk about what is the core product. So peer-to-peer lending stands for where one peer steps into the shoes as a bank to support another peer who's looking for funds. So we lending and borrowing is like a very age-old product, right? Indians have been lending and borrowing for centuries and millennials. Now this gives a very formal structure to entire lending and borrowing as a product, and this also brings in formalization and kind of a regulatory framework within which the platform needs to operate, and completely technology enabled. So a very age-old practice of giving and borrowing money has been married with technology under the framework of the latest technology. So this is what peer-to-peer lending does. So let's assume, Uday, you have some spare money, and obviously you are invested in equity market, mutual fund market, other alternate assets, real estate, and you are looking for some fixed income return. Now, fixed income return, you can go to a fixed deposit, you can go to a corporate deposit, you can go to a NCD, you can buy a bond. But all of these are marred with one thing, which is like a low rate of return. So if you have additional risk appetite and you want to kind of increase your return, then possibly you can give money to individuals where you do not have to go and ask for money. There is a proper framework where money is kind of returned back to you, and there is a organized way in which the money comes back to you. So you step into the shoes as a bank, and Amit is a borrower, for example. So you help Amit in whatever his requirements is by lending directly to Amit, but via a platform. This platform is what is called a P2P lending platform, and the entire science of doing this is how to minimize the risk, how to diversify your exposure. So instead of lending to one Amit Uday, you will lend to hundreds and thousands of Amit. Like when you give money to a mutual fund manager, he doesn't invest in one stock, he invests in multiple stocks. So it's a new alternate fixed income asset class, which gives you a possibility of higher rate of return associated with a extra risk. But kind of this is something that is growing. Now, coming to regulation, RBI started regulating peer-to-peer lending space in October 2017. It came up with a master direction on peer-to-peer lending, and it said that every platform which was practically unregulated till that point in time doing this business would have to register as a NBFC P2P. So they came up with a separate class of NBFC licensing where the platform needed to register as an NBFC P2P. there are huge requirements there. So we had to submit a very, very detailed application. There were questioning on getting the license. And only after getting convinced that the directors have fit and proper, they have adequate experience, they have adequate processes on IT security, on confidentiality, on privacy, then they give you a certificate of registration. So once you get a certificate of registration, then you are able to operate as a platform. There are certain things that one should know. Only a person capable of entering into a contract can be a borrower or a lender. There is a cap on the maximum amount of investment that a lender can make across all the P2P platforms in India, which is around 50 lakh rupees, which is 50 lakh rupees. There is maximum amount that you can give to one particular borrower. So in your example, Uday, you cannot give more than 50,000 rupees to Amit, despite you saying that I am comfortable with Amit's profile. So there are many such prudential norms and regulatory requirements that have been put into in place to make sure that this industry flourishes and grows in the right way and in the right direction.
Right. So one thing I realized is, like, 50,000 is max, isn't it? I felt as if individually in your site, I think it is 5 to 10,000 is the maximum limit per person.
Yeah. So RBI says that 50,000 is the maximum. Now each and every platform tries to kind of manage the risk by maximizing the amount. So at our platform, depending upon the risk rating of a borrower, there is a cap, and also which is a function of the portfolio that you want to, or the exposure that you want to create. So let's take an example. If Uday wants to invest 50,000 rupees, then he cannot invest 50,000 in Amit. In our case, the maximum amount that you can do is limited to 10% of Uday's exposure, Uday's portfolio amount, which is 5,000 rupees. So despite you liking, Amit might have a borrowing requirement of 5 lakh rupees, but Uday cannot give more than 5,000 rupees. And so there has to be 20, 30, 50, 100 Udays who need to give money to one Amit. Now we have had cases where one 5 lakh rupee loan has been filled by 385 different lenders. So that is the kind of granularity that we are talking about, and one lender giving money to 500, 600 different borrowers. So the risk diversifies and gets optimized and reduced.
No, I found it in my own investors case. Actually, it's almost around 200 plus. So yeah, it's one amongst the best ways of investing. The only thing is the knowledge levels have not passed on to most of the investors, or else this is one amongst the stellar investing options actually in the present scenarios.
I think, Uday, as the time progresses, like we are having this discussion, you kind of found out this idea, you found it appealing, you invested a little bit of money, you had a good experience. With word of mouth, this will grow. And in my view, in 5, 7, 10 years time, this will be as big as the mutual fund industry in this country.
So let's, as discussed, let's see, as you taken up the topic mutual fund, can you just compare yourself as Finzi with mutual fund, the total mechanics of it, like, how do you feel like, both are, I think, how similar they are to each other and how different they are to each other. So, we can just give some similarities to each.
Good question, Uday. I think I have drawn up a few slides on this. Now, just before I get into the slide, I think what we need to understand is that you, either because you do not have expertise, or you do not have time, or you do not have that kind of wherewithals, so you give money to a fund manager, and that fund manager invests money on your behalf. That is what mutual fund is all about, right? Where does he invest? He invests in either equity stocks, or he invests in bonds, or he invests in T-bills or commercial papers, things like that. So which is what a fund manager does, and kind of whatever is the risk is completely yours as an investor. And the fund manager obviously has a management fee and a cost ratio, which kind of he charges. Very similar, okay, is peer-to-peer lending. So Uday, when you are giving money, in our example, to Amit, whatever rate of interest that Amit is paying comes to you. Okay, if Amit was not to pay, then risk is also yours. So the platform's role is very similar to that of a fund manager. It kind of makes sure that Amit is assessed properly, Amit pays the right interest, Amit pays the interest on time, and that interest is given back to Uday on time. Um, and as you might think that the risk is entirely yours, which is very similar to a mutual fund, uh, the uh, success rate of a platform will depend on what kind of return that platform is able to give to an investor, net of default, net of expenses. So when a fund manager invests in 100 stocks, it's not that all 100 stocks do well. There are some stocks which do well, there are some stocks which do not do well. But what matters is what is the overall rate of return that that fund manager is able to give to you. So similarly for P2P platforms and in Finzi as well, you will see that what would matter as the benchmark would be the rate of return net of default that the platform will be able to give, and that will determine whether a platform will be successful or not successful. Now, just to add some structure to this discussion, let me just share a couple of slides. Just tell me when you see my screen there.
Yeah, I can see. Yeah.
Okay, so I'm just trying to draw kind of what are the similarities between mutual fund and Finzi. Now I'll start on the mutual fund side, which is on the left side of your screen. So investors, mutual fund, and equity or debt instruments. So investors give funds to the mutual fund, and there is an AMC and the trust structure there. Mutual funds allocates units for those funds. Uh, the fund manager invests the money into equity or debt instruments. And in case you need money, there is a redemption option. So you can sell for the open-ended schemes, you can sell the units. And there is a kind of investment risk, which the investor is running on the market. So this is kind of a broad, in a very, very holistic view, without getting into details. This is the structure of a mutual fund investment. On the right-hand side is Finzi investment. Let's see, investor gives funds to Finzi. Now, again, we have a trustee and escrow mechanism. So the money doesn't come to Finzi. Money goes to the escrow account of Finzi, which is managed by a trustee. So the fund are completely in control or for the benefit of the investors or lenders here. The funds go there. Finzi sources the borrowers, risks, analyzes a borrower, does the KYC of the lenders and investors and borrowers both, and risk rates a borrower. And depending upon the risk involved, it allocates a rating. There is a very, very scientific process. There is a credit algorithm which uses the information on his demographics, on his income level, on his past behavior, on CIBIL data, on the leverage ratios, on his savings pattern, on his social media profile. A lot of these parameters, almost 130 different parameters, are used to risk rate a borrowers. Now, the money is disbursed. Okay, so you get monthly returns. Now, this is another very important thing, but I'll come to it later. The loan money is given to the borrowers, and from the borrowers, you get EMIs. Now, this is very different, okay? Unlike in mutual fund, where you invest and you hold on to the investment for a very long period, and you might make return as the markets are choppy, as the volatility is high, the returns might come up and go down. In this case, you get monthly EMIs. So you step into the shoes of a bank as a bank. Like a bank, if I have taken a home loan and I have to repay the money to the bank, I pay a monthly EMI to the bank. In this case, the borrower will give you a monthly EMI. So you get a monthly return. You have an option not to take that monthly return, and you reinvest the entire money, but completely at your discretion. So if you want that money, it will come by default to your bank account. If you say that, no, I don't want that money, I want that to be invested and kind of enjoy compounding of money, then you can choose reinvest. So all of this is automated.
Or as like a dividend also, he can take out the interest part of it.
Exactly.
And
so like a monthly withdrawal plan or a dividend plan, like you have growth plan and the dividend plan. This is more like a growth plan when you switch on the reinvest, or it's a dividend plan when you take the monthly returns. But dividend is also announced in a way periodically, right?
Right.
And in this case, it's not a floating. The only risk is the default risk. but the rate of interest is fixed. So your return is not a function of how the interest rate is moving in the economy. Like for example, if currently the interest rates are very low and it's likely that it will remain low for a very long time. But in our case, if you have contracted a rate of say 12%, you will continue to earn 12% for the life of the loan. There is a tripartite loan agreement between Finzi, investor, and borrowers. Now, each and every loan that you invest in, Uday, you will have a loan agreement on your dashboard. You might choose to download it, you might keep it there. So the example that you were giving, one of your investor has 200 invested in 200 loans. Then for those 200 loans, he will have 200 loan agreements, which is extremely transparent, and all the terms and conditions are captured there. And there is an investment risk. Now, one question that everyone will have is, do I need to follow up with these borrowers to kind of repay me? No, there is a, like in SIP, you have a pull happening from your account, or in a home loan, you have a EMI pull happening from your account. We also register what we call ECS mandate or NACH mandates, and we pull the money EMI amount from the borrower's account on a monthly basis. And this is how the monthly returns come to you. In case there is a delay, there is a collections team, there is a legal process, there is a recovery process that is followed. But all I can say is this is not free of risk. Like any investment, there is a risk involved. Now, how will we be judged will be a function of the default adjusted rate of return that we can give to our investors. So if you
sorry
compare,
to stop you
it's very,
there.
very similar.
One small question actually, which my investor came out with,
Yeah.
was for an investment of say 3-5 lakhs. In that, each investor will be lending. No, investor will be lending to each borrower at 2,000 or 3,000 rupees. For each 3,000, you will be having tri-party agreement. And how valid is it? Is what something was a question which was there.
It's a completely legally enforceable, and we are, so for the delays that we have, for the defaults that we have, there are legal cases which are being used, which are happening right now. Section 138, Section 25 kind of cases are being filed, and also kind of breach of agreement as well. So these are legally enforceable. And so the investment amount, the minimum investment amount in one particular loan is 1,000, maximum is 50,000. And the amount is that you invest in each loan is a function of, as I said, the rating of the loan, and also the size of the portfolio. Now, if there are 385 lenders in one loan, then it is not 385 agreements. These are 385 lenders whose name and their exposure amount is mentioned in the schedule. The loan agreement is one, which is executed between the borrower, between Finzi and the 385 borrowers. Now, the investors also do not need to sign this individually. There is an electronic consent that is taken and which is imprinted into that loan agreement. And the borrower can sign physically, the borrower can sign via Aadhaar OTP. So he has an option to sign electronically as well.
And one more question which was there regarding if a person defaults with Finzi, will he get a loan otherwise?
So what RBI regulations say there, now RBI regulations have tried to strengthen this peer-to-peer ecosystem. Because we are registered as an NBFC, obviously we can take the data from CIBIL, Equifax, Experian, and CRIF, but we also contribute the data on a monthly basis to these credit agencies, credit bureaus. So what it does is, in case somebody borrows, so say for example, I default on you. Now, if this is a private loan, it will go unreported. But because it is through an organized P2P lending platform, it allows the P2P lending platform has to report a default by Amit to all the 4 credit bureaus. And that will hamper my credit score, my CIBIL score, and I would find it difficult to take loan from anywhere else in future. So now CIBIL score or any of these scores are becoming so important that people cannot afford to go wrong on this. So it is like a new benchmark, and it is very important that people take care of their CIBIL score, the financial health, like they take care of the physical health. So people are conscious of this, and we have been given this special dispensation that though the money has not gone out from our balance sheet, unlike a bank or a balance sheet NBFC, still we have been asked to report the data that Amit has defaulted on Uday's loan. So this is kind of a special dispensation given to us, and we are allowed to report this data to Reserve Bank of to the credit bureaus, so that there are so the people who are defaulters do not go scot-free.
And yeah, I think we just gone bit sideways from comparison between mutual
So
fund to.
I think we can do now, we can quickly give you a snapshot of comparison of how on different parameters. Like, first of all, we spoke about structurally on how the investment into a mutual fund is very similar or dissimilar with investment into peer-to-peer lending. Now let's kind of try to address the similarities or differentiation across a few parameters, which will give our investors a very good overview of what this is all about. Okay, just give me one moment. So now let's say we kind of talk about a few parameters, like who's the regulator. The mutual fund is regulated by SEBI. Finzi is regulated by Reserve Bank of India. There is a registration requirement. Yes, a mutual fund needs to register as an asset management company. For Finzi, it is like registering as an NBFC P2P, which is a separate class, as I said. Who's the sponsor? In mutual funds, it's typically established BFSI players or industry names like Aditya Birla or kind of HDFC or an ICICI or a Nippon. So these are the names that you would typically see as a sponsor. In Finzi, because it's a new business, we have new age fintech startups which are the sponsor, and that is the reason it will take a little time for people to get comfortable. It's very easy for people to take comfort from the goodwill of an established player versus a new age player. Obviously, it takes time, and that's the reason we see now slowly and steadily kind of things catching up, and people are becoming more and more aware of this product. Industry stage, obviously mutual fund is matured. It's 25 lakh crore plus in AUM. This is nascent and growing. Number of players, it's 45 on the last count. In peer-to-peer lending, there were 21 with around 7 to 8 active platforms. There are others also who are kind of either at the launch stage or who are going to become active. Investment, your investment is in form of mutual fund units. In Finzi, you get a share, a percentage share of a retail loan. Okay. What are the risks? In mutual fund, there is equity price risk, credit risk, and interest rate risk. So it's we have seen kind of the risks involved in mutual fund as well. And in Finzi, there is no interest rate risk because the rate of interest is fixed. It is credit risk, and obviously there is no equity risk because the underlying product is a loan. Who bears the risk? Obviously, investor in mutual fund, and same applies for Finzi as well. Core driver is past performance and sponsor. In our case, it will be technology, positioning, user experience, and as I said repeatedly, I have said net of default NPA track record. Investor eligibility, both Indian and foreign investors can invest in mutual fund market. In peer-to-peer lending, only Indian investors can invest, and they have to be 18 plus. In mutual funds, you can open up a minor account. In Finzi, you cannot open up a minor account because you need a capacity to contract. Target investor, wide spectrum, and it ranges from risk-free to kind of somebody who understands the risk. Ideally, I will say for peer-to-peer lending, because it is not a risk-free product, you are targeting a higher rate of return. It is meant for somebody who understands risk and who has current exposure to equity or mutual fund. Investment themes, it's debt or equity or balanced. in case of, or it can be thematic, like you have a pharma focused mutual fund or a bank focused mutual fund or a MNC
Sectorial.
mutual fund.
Yeah.
In our case, it's purely debt. An investor has complete discretion of choosing what kind of borrower he wants to give money to. He wants to take moderate risk, he wants to take low risk, he wants to take a high risk. It's based on the risk appetite. So in a way, in a nutshell, Uday, what I try to do is I try to compare the models and also try to compare the industries across a few parameters. I have given a very, very broad, holistic kind of comparisons. Obviously, once we get into it, we can get into the details as well. But for the purpose of this discussion, I think I have tried to kind of assimilate and kind of give as much information that an investor would need or would look for. If anyone needs any additional information, we are readily available.
It was a very informative briefing about the Finzi, and comparison was really informative actually. So thanks Amit for sparing time with us, and briefing about the whole product itself. And we'll keep doing this on a regular basis so that you can brief more about.
Uday, I must say that this is a new product. It requires coaching, it requires understanding, it requires handholding, and we are there to provide information on different aspects to our investors. What are the processes involved? How do we analyze risk? What are the regulatory requirements? So we can take them through different aspects of our business to make them more and more comfortable. And once they experience this themselves over a period of time, the confidence will grow, and obviously Finzi will grow, and the industry itself will grow.
Maybe I think next time around we may compare P2P to a bank. Maybe that can also be done, I think.
Wonderful idea. And you will be surprised how our investors are actually becoming a bank themselves by doing this product.
Right. That's what I've been comparing actually over the long time with my investors. So I think, yeah, thanks very much, Amit. Thank you.
Yeah. Okay, great, Uday. Thanks for hosting me here.
Thank you for watching. Please do like, share, and subscribe. And don't forget to download our app.